Hey everyone, welcome back to Corporate Decoder, the place where we try to unravel the mysteries of corporate filings. This time we're diving into Evercore's annual report, and let me tell you, there are some twists and turns that might just make your head spin a little, but don't worry, we'll get through it together. Evercore is calling themselves the leading independent investment banking firm. That means they're not a huge bank with tons of different services. They just focus on giving advice, mostly on mergers and acquisitions, or M&A. Basically, when companies want to buy, sell, or join with other companies, Evercore is who they call for guidance. Think of them as the strategic matchmakers of the business world, and apparently they are the best in the world. In 2024, their investment banking and equities business, which is basically their advisory and trading arm, made about $2.81 billion. That's a big number. It came from around 748 different deals and transactions. So you can see the company makes most of its money from banking operations. They have about 144 top-level investment bankers and 40 in equities. Evercore is investing a lot in recruiting talented professionals to add to these numbers. So they want to be in a strong position to make even more revenue. Evercore provides various services including mergers and acquisitions advice, restructuring help for companies in trouble, and even advice on managing market risks from things like currency changes when big deals happen. They can act as an independent advisor, a placement agent to find investors, or an underwriter to sell securities. Evercore ISI, which is Evercore's equities research arm, was recognized as the top-ranked independent firm this year. They also ranked first for analysts among all firms on both a weighted and unweighted basis. It shows that their research and sales teams are delivering value for their clients. They also have an investment management segment, which is smaller but still important. It includes wealth management for rich individuals, trust services, and investments in private equity funds. While the banking and equities segment makes most of the revenue, the investment management business is pretty stable. As of the end of 2024, Evercore Wealth Management had about $13.9 billion in assets under management, or AUM. To grow the business, Evercore is focused on finding and hiring top people in the industry, along with helping employees develop. They're trying to grow their wealth management area. We will also watch if Evercore make acquisitions of other advisory firms. Evercore has a strong commitment to manage their workforce, so they want to attract, develop, and keep talented people. Some of these efforts include health and wellness benefits, including offering vaccines and well-being education, and of course, competitive pay. They compete with big universal banks like Goldman Sachs and independent advisory firms like Lazard. They say that they have a broader global presence, deeper expertise, and more diverse capabilities. They want to develop trusted, long-term relationships with clients without the possible conflicts of universal banks. They are also subject to extensive regulation, both in the United States and in other countries where they operate, such as the UK, where their operations are authorized by the Financial Conduct Authority, or FCA. The FCA can investigate and take action if companies break the rules, including criminal offenses. The regulatory environment is an evolving risk and also make it harder for their clients to estimate potential losses. One of the biggest risks for Evercore is that difficult market conditions could hurt their business. If the economy is struggling or if there's a lot of volatility, mergers and acquisitions tend to decrease. A client could delay or terminate an acquisition transaction for a host of reasons. If this happens, Evercore's profits could go down. The company depends on their senior employees, especially their executive officers. If they lost a lot of these senior people, their business could really suffer. The market for skilled workers is highly competitive. Evercore is exposed to risks associated with protecting the integrity and security of our clients, employees, and others' personal data and other sensitive information. They have to maintain effective internal controls to stay in compliance with the Sarbanes-Oxley Act. If they fail to do this, it can hurt the business and even lead to penalties. One thing to watch for is that the payments they make to their senior managing directors could be substantial. The financial services industry faces a lot of lawsuits and regulatory issues. This means the company may experience damage to its professional reputation or legal liability. For example, there have been allegations against Evercore of improper conduct. It is important to keep in mind that financial advisors can be subject to significant legal liability. A large portion of Evercore's revenue comes from advisory assignments, but these aren't guaranteed. So they face strong competition from other firms, which could make it hard to win advisory work. They're constantly trying to grow and improve, but the business is reliant on their existing capabilities. If there's a decline in the number of debt defaults or bankruptcies, it may harm demand for their liability management and restructuring services. The amount of assets they manage can change a lot. If the funds they manage perform poorly, it will have a big effect on their investment management revenue. In addition, agreements they have with the OCC, which regulates trust companies, require them to maintain and segregate certain assets. Also, because they work in many countries, political and financial instability in some regions could hurt their results. They face the risk of fluctuations in foreign currency exchange rates. If international business increases relative to their total business, it could have a more pronounced effect on their operating results. A substantial portion of Evercore revenue is derived from advisory assignments for investment banking and equities clients, which are not long-term contracted sources of revenue and are subject to intense competition, and declines in these engagements could have a material adverse effect on our financial condition and operating results. In the fourth quarter, Evercore bought back a bunch of its own shares, which might mean they think the stock is undervalued. This would reduce the number of outstanding shares over time, diluting the ownership of existing stockholders. The market price of their stock may be volatile, which could cause the value of their Class A common stock to decline. Looking at their internal controls, management says that their controls are effective. Deloitte and Touche LLP, their accounting firm, agrees with management. It shows that the company has maintained effective internal control over financial reporting. Cybersecurity continues to be a concern and is critical to their operations. They've got a plan in place to handle cyber incidents, and their audit committee is informed of developments regarding their information security posture. Fair value measurements. The company follows accounting standards for measuring fair value of financial instruments, including how assets and liabilities are categorized based on the inputs used to determine fair value and how pricing inputs are obtained. Deloitte also gives their opinion on the internal controls and effectiveness of the company's reporting. This is a standard procedure, but it is still nice to have. Deloitte found no issues with their internal controls, which is good. This is very important because if these numbers are not dialed in, it raises concerns about the data. Okay, so based on what we saw in the report, what's our take on Evercore? The company is currently doing very well. While their stock price is high, their revenue and talent has been rapidly growing. The valuation is tough, with a market cap that is around $8 billion. Looking at their profits, Evercore is a solid company. Their success hinges on a few things they can't completely control, such as a complex legal and regulatory environment. Their success hinges on a few things they can't completely control, such as complex legal and regulatory environment. Taking everything into account, Evercore looks to continue doing well. I'd set a price range of $220 to $240, but with a bullish bias if global M&A activities continue to increase. This company is set to continue outperforming in the coming months. If you found this useful, please subscribe and hit the bell for more easy to understand analyses of complex financial reports.